It's Thursday, the 28th of October, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Inflation is on the rise, pressuring the Reserve Bank to move on interest rates. That's our main story. Also today, international travel to commence next week. Woolies warns that the good times are over. And isn't American football worth $60,000 US or $900,000? Then stay listening for Sean's chat to Diana Messina from AMP Capital about yesterday's inflation figures. Because it is the big story today, Sean, inflation is on the rise, but is it growing fast enough to force the Reserve Bank to lift interest rates sooner than expected?
That is the big question, Michael, that all we mortgage holders want answered. Consumer price figures released yesterday show that headline prices rose 0.8% during the September quarter to be 3% higher over the year. The all-important underlying inflation figure, which is what the Reserve Bank likes and takes out all those volatile items, rose by 0.7% for the quarter and 2.1% for the year. That's the first time in 6 years that underlying inflation has hit the Reserve Bank's inflation target, having spent all that time below 2%. On a 6-month basis, inflation is running at an annualised 2.4% level, smack bang in the middle of the bank's target. But momentum is definitely with price rises. So, if the Reserve Bank wants a reason to say it will start tapering its bond buying program, or perhaps hint that the official cash rate might rise before 2024, then yesterday's CPI data gives it one. It certainly makes next week's RBA board meeting very, very interesting.
You mentioned, Sean, the momentum being with price rises. What is more expensive now and what isn't?
Well, housing prices were higher. I think the property market, no real surprises there. Transport costs were up as well, and that in large part reflects petrol prices. We all understand that one too. Recreational and cultural prices jumped, and that's really about rising prices on technology products. We're seeing some of that come through because of chip shortages throughout Asia. Clothing and footwear and communication prices fell.
Okay, so what's the verdict? What's going to happen to interest rates?
Plenty of market economists think the Reserve Bank will be forced to lift the official cash rate as soon as November next year. Diana Messina, senior economist at AMP Capital, is one, and she tells me about that in the daily interview, which is airing immediately after the show. Now, as we know, the central bank has adamantly stuck to its line that rates won't rise before 2024. But as I said before, yesterday's CPI figures gives them a reason to change their mind. I'm not sure whether they'll do that next week, probably not, but you might just see their language softening a bit.
All right. Did the inflation data have much of an impact on financial markets?
Well, it sent the Australian dollar higher, at least initially, and it was heading towards 75.4 US cents, but then came back a bit. Bond yields surged while the Reserve Bank is trying to keep a lid on 3-year market interest rates at 0.1%. Investors aren't helping at the moment, pushing those rates much higher. The S&P ASX 200 had been trading higher yesterday morning, but fell sharply immediately after the 11:30am announcement before clawing back. Inflation fears can spook markets, and that's really what happened yesterday. In the end, the S&P ASX 200 ended the day flat. Now, interestingly, the major banks did well. Making money is much easier for the banks when interest rates are rising. Also yesterday, the big miners fell back. Telstra was up more than 3%, pretty good effort, while James Hardie was down more than 2%.
And what about overseas markets? What's happened on Wall Street overnight?
Well, strong earnings from McDonald's Corp and Coca-Cola helped markets, and in early afternoon trading, the S&P 500 was higher while the Dow Jones Industrial Average was slightly lower. The tech-heavy Nasdaq was up more than 1%, thanks to big jumps in Alphabet, Amazon and Tesla. European markets were lower, and Michael Woolworths mentioned the Bank of Canada overnight said it will end its bond buying program and bring forward its expected timeline for interest rate rises. The central bank said robust economic growth had resumed in the North American economy.
We'll be back in a moment with the rest of the day's business news. Sean, plenty to discuss this morning. What's the latest COVID news?
Well, there's plenty of that around. The federal government will allow booster vaccination shots from November 8 after the Therapeutic Goods Administration gave the go-ahead. The aged and disabled will get priority, and people will receive the third shot about 6 months after they get their second. Also, the Morrison government has officially scrapped its ban on overseas travel. And from Monday, people will be able to leave Australia without approval. What a great day, Michael. The Federal Health Department yesterday put the total medical costs of COVID-19 at $32.6 billion. This includes Medicare, medicines, aged care costs, hospitals funding, medical research and vaccine agreements. Of course, the economic cost has been much, much higher. The number of new cases in New South Wales pushed back above 300 yesterday. That state's Bureau of Crime Statistics released data yesterday showing that almost 37,000 lockdown breaches were issued during the 2 months of closures, with nearly two-thirds being for non-essential travel or failing to wear a face mask. And New South Wales Health said unvaccinated people who contracted COVID-19 were 24 times more likely to be admitted to hospital.
Wow.
Surely that's an advertisement for getting yourself vaccinated.
That's an incredible statistic.
24 times.
Wow.
Amazing.
Yeah, just tell anyone who's resisting or reluctant to get the jab that stat. Get them there pretty quick smart.
Absolutely. And finally, Victoria recorded 1,534 new cases and 13 deaths yesterday. The 7-day average for the state is falling, as is hospitalisation rates, which of course is really good news.
Yeah, certainly is. Now, Sean, the boss of Woolworths, Brad Banducci, was out and about yesterday warning that the supermarket sales boom is over.
Yes, he said the shift to at-home consumption was unwinding as economies reopened and people ate out again. It means sales for Woolworths in New South Wales have been slowing, albeit from very, very high levels. By contrast, the big W stores have benefited from much more foot traffic. Mr. Banducci had a bit to say about prices as well. In some areas, such as red meat, prices were higher and expected to keep climbing. In others, notably fruit, remember our story recently about the avocados, prices are actually falling. He also said that since the pandemic began, more than 22,000 Woolworths staff have been forced to isolate after around 1,500 sites were identified as exposure sites. Must have been a very difficult company to run throughout that period.
Yeah, you're right there. Now, Sean, I know journalists that have worked in Canberra both love and loathe Senate estimates, but they do produce news.
Yes, I have spent many hours in Senate estimates and it is a punish, I've got to tell you. Now, Senate estimates is where bureaucrats turn up and face questioning from senators. All sorts of departments face the music in Senate estimates. It's going on at the moment, and while it can be incredibly tedious, Senate estimates always turns up great information. Now, let me give you a sample of yesterday's action. Federal Treasury was in estimates. It said the effective unemployment rate is currently 9.5%. That's way above the official rate of 4.6%. There's about 450,000 people who are employed but worked 0 hours, hence the difference between the two numbers. The Treasury number is a much better measure of what's really happening in the labour market. The department boss, Stephen Kennedy, also said that Treasury hadn't done modelling on climate change. That was done by the Department of Industry, though it is a little surprising that Treasury didn't get very involved. Also in estimates, the tax office said about $267 million had been returned in voluntary JobKeeper repayments. That, of course, is out of about $90 billion handed out. More than 100 firms were approached to refund the money, and 86 did. And also the Navy is in front of estimates. It said it was unlikely to select a hybrid nuclear submarine technology that married together British and US technology. Now, why do we care? Because it means less delays for the new subs that we signed up to early last month. And the Navy wants the first sub delivered by 2040.
And even that's nearly 20 years away, isn't it? We're not talking fast delivery here, are we?
No, we're not. I appreciate that the technology is well beyond anything you or I could even imagine, but 20 years, long time.
Indeed. Now, we've talked a lot on the podcast about the A2 Milk Company. The share price fell more than 12% yesterday, having recovered somewhat in recent weeks after the group announced a revised growth strategy. What's going on?
Well, it's never good when you announce a new strategy and your share price tanks. Let's just put that up front. A2 Milk said it will focus on getting closer to its customers in China, investing in brand, digital marketing and e-commerce, although the group said Chinese consumers weren't prioritising international brands, and the outlook for the Chinese birth rate is actually unclear. That's the really big problem for A2. It's overly reliant on selling infant formula into China, and that's not working at the moment. It also said that it will team up with one of the world's largest chocolate companies, Hershey's, to co-brand chocolate milk. All in all, the company said it would sacrifice margins for revenue growth and that triggered the share price fall.
Okay, Sean, what's making headlines in today's news media?
The Australian is reporting that Australia will refuse a US and European-backed pledge for a 20% cut in methane emissions by the end of the decade at next week's Glasgow summit, fearing it will lead to the culling of herds and force shutdowns in parts of agriculture, coal and gas industries. The same outlet is also reporting that the US government has told the High Court of England and Wales that it gives full diplomatic assurance that WikiLeaks founder Julian Assange would be allowed to transfer and serve his sentence in an Australian prison if he were extradited to the US and convicted. And the Financial Times is reporting that senior Democrats have laid out detailed plans for a new tax hitting about 700 American billionaires in an attempt to extract revenue from the ultra-wealthy to pay for President Joe Biden's $2 trillion flagship spending plan.
Running through some of the other stories around today, the federal government's modelling to achieve net zero carbon emissions will be released in the next couple of weeks, the Prime Minister said yesterday. Some headline figures were released on Tuesday, but it was a bit light on detail. That triggered criticism from the opposition, and both Scott Morrison and Anthony Albanese have been trading jibes about fighting an election based on climate change.
The fight between the board of vitamins group Blackmores and the son of the founder, Marcus Blackmore, who controls 23% of the company, is deteriorating very, very rapidly, Michael. Mr. Blackmore, who departed the board a year ago, yesterday said other directors should think about asking Chair Anne Templeman-Jones to relinquish her role after almost 39% of proxy votes were cast against her at yesterday's AGM. He described his relationship with the chair as poisonous. That's his word. Now, I don't know the rights or wrongs of this, but surely the fight isn't helping shareholders. Having said that, Michael, Blackmore's share price is actually up more than 50% over the past year.
The New South Wales ICAC inquiry continues with the state's regional secretary, Gary Barnes, saying former MP Daryl Maguire had the ear of the former Premier Gladys Berejiklian. Mr Maguire will front up at ICAC today. There will be a lot of people watching that one.
Sure will. And Michael, where was your first bank account?
Commonwealth Bank.
Of course. Did you know that the Commonwealth Bank's Dolomites program, which is really quite an iconic program that taught many of us how to bank, has been scrapped?
No, I did not know that.
The Commonwealth Bank began its education program back in 1931, when it was government-owned, of course, and it's run in one form or another ever since. But last year it hit a hurdle when the corporate watchdog, ASIC, said the school outreach program didn't actually improve savings behaviour. Mind you, it did create many Commonwealth Bank customers. Alas, Michael, Dolomites is no more.
I feel like I've lost an old friend.
You have. We all had it.
Oh, gosh. Oh, that's a part of our history gone forever. Now, Sean, what's the key overseas news this morning?
733 institutional investors representing $52 trillion in assets have signed a push ahead of the UN Climate Change Summit in Glasgow next week to reduce emissions by 45% relative to 2010 levels by the end of the decade. It's probably the biggest push by institutional investors ever, and the significance is that it will put a hell of a lot of pressure on governments and corporates to do much more on climate change than what they've promised already. Also, Google parent Alphabet reported strong quarterly sales, but disappointed in its YouTube and cloud computing divisions. Microsoft also reported strong sales, and combined, the two made $110 billion in revenue for the September quarter, and that was up 33% from last year. And staying in the US, Michael, Tom Brady. Do you know Tom Brady?
I do indeed.
Arguably the greatest quarterback of all time in American football. So the longtime New England Patriots star has won 7 Super Bowls, more than anyone else. He joined the Tampa Bay Buccaneers a couple of seasons ago, and on the weekend threw his 600th touchdown pass. The ball somehow ended up with a fan, and Brady has offered 1 Bitcoin for the fan to return it. Pretty generous, given a Bitcoin is worth more than $60,000. But now there's a bit of a furor going on because the ball that Tom Brady threw to be the first person to reach the 600 milestone, according to analysts, is worth a hell of a lot more than 1 Bitcoin. They're valuing it at closer to $900,000. What would you do if you had that ball?
I would most definitely be holding on to it. But I'm also noticing a bit of a theme here, Sean. Yesterday we had Michael Jordan's shoes. Today we've got Tom Brady's ball.
We're becoming a bit of a sports show.
Indeed. Or we've just realised there's money to be made in sports memorabilia.
Maybe that's it.
All right. Up next, Sean, is the daily interview. We've mentioned it a couple of times now. Diana Messina from AMP Capital. She is always very good.
She's great, very timely given the CPI figures out yesterday. AMP Capital thinks there will be an interest rate increase in 12 months' time. Well worth a listen.
Yes, certainly is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Have a great day, Michael.
It's Thursday, the 28th of October, 2021. Make sure you follow the podcast. Join us online as well at LinkedIn, Twitter and Facebook, and sign up for our free daily newsletter at our website, fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.